Good morning, ladies and gentlemen. Welcome to the Zeder full year results presentation. My name is Johann Le Roux and I am the CEO of Zeder Investments. In terms of our agenda today, I will be discussing some noteworthy transactions. This will relate to some disposals during the year, also share buybacks and special dividends. I'll then discuss our financial results, the impact of COVID on our business, as well as our latest sum of the parts update. I'll spend some time on our portfolio assets to give you a bit of a feel for how they've done during this period. And then I'll spend some time in terms of the prospects for Zeder and strategy. Here I'll refer to the cautionary release earlier this morning. And there'll be a question session after that. And please, may I ask that you can send your questions to the email on your screen during the presentation so that we can answer your questions timelessly at the end. In terms of noteworthy transactions during the year, it's been a very, very busy year for Zeder. One often forgets that the Pioneer transaction actually did take place during this financial year. We were very fortunate for that to have been completed 1 week before level 5 lockdown in South Africa. We received 6.4 billion rand at that stage, and it put us in a wonderful position prior to all the uncertainty around COVID. We used some of those funds to settle all our debt obligations, and Zeder currently has no debt at a group level. In addition, we were approached on Quantum Foods, and we sold that investment during July, and there we received a further 308 million rand for Zeder. In terms of special dividends and buyback of shares, as a result of the Pioneer transaction, you're all aware that we paid a special dividend of 2.30 rand per share in April last year. That was about 3.9 billion rand that was returned to shareholders. In addition, the board yesterday declared a further special dividend of 20 cents per share, and we obviously did take into account the effect of COVID on Zeder and our portfolio. And during the year, we also invested in share buybacks. We spent 426 million rand on shares. We bought back 172 million shares at an average price of 2.48 rand per share. And based on the share price of Zeder yesterday, it was about 2.80 rand. So you know, those shares were bought at a lower value than our current share price. In terms of our financial results, I'm just going to spend some time on the summary, you know, where we are, change in accounting policy, COVID, and then our latest sum of the parts. In terms of our results, as I reported at half year, there's a change in accounting status to that of an investment entity effective from 1st of March. This will mean that our results for February 21 will not be comparable to the prior year. This policy was implemented prospectively, and as I said, no prior numbers were restated. And basically what it means is that we cease to consolidate our subsidiaries and will now measure our investments at fair value through the income statement. Our balance sheet will, from now and also going forward, be closely resemble our sum of the part values. And we have the view that this will be favorably received by the market because we'll be presenting far more useful information, especially on our unlisted investments. In terms of the sum of the parts, if you do compare last year to this year, there was a decrease to 4.33 rand per share, but that was mainly as a result of the 2.30 rand special dividend that was paid last year. Our sum of the parts, if you exclude Pioneer and Quantum on a like-for-like basis, it actually increased by about 11%. And that was mainly as a result of upwards valuations in Kaap Agri, TLG and Cape Span. At our Zeder share price of yesterday, our discount remains around the 35-36% levels. And as I said before, this is not unique to Zeder, it's all prevalent in listed markets. In terms of cash and Zeder's balance sheet, we've got a strong balance sheet. We have almost 900 million rands of cash at the moment. Cape Span and TLG also declared dividends to Zeder that we'll receive in April. And then also, as I mentioned before, the board resolved to pay a further special dividend of 20 cents per share, which is just over 300 million rand. In terms of COVID, I think we all know the impact on South African business, you know, GDP retraction, job losses, you know, the downgrades we've had. The environment has been quite tough and still remains constrained, but we do see green shoots. And I must say, in terms of Zeder and our portfolio, you know, we've been very, very fortunate. And yeah, I have to commend our portfolio management, where they've implemented proactive measures during the COVID period. and our companies have largely been quite resilient during the COVID period. As you're also aware, most of our investees were positioned in the essential services industries, and they will largely remained open. But the impact of COVID still remains clear. We'll monitor our investments, we'll look at their balance sheets, and Zeder, with the cash that we currently have, we're well positioned to support our investees where necessary. I think in terms of COVID today, I think the most significant challenge that we see is in global supply chain constraints and bottlenecks. And these are something that's proactively managed by our investee management. In terms of the sum of the parts, as I said, from R5.97 per share to R4.33, largely as a result of the special dividend. And if I look at our valuations comparatively, you'll see Zaad's valuation is relatively flat. Logistics Group, there's an uptick. Capespan, there's an uptick. Kaap Agri, an uptick. And in that other bucket is our investment in Agrivision included. So you'll see quite a nice balanced portfolio, Zaad being our biggest asset, and then the other three, all between the 15 and 20% region. You'll also just note the number of shares in issue, where in the prior year we had 1.7 billion shares in issue. That's now just over 1.5, and that's obviously as a result of the share buybacks. Then when I go to our portfolio review, Zaad, our specialist agricultural seed and agrochemicals company, the CEO here, Antoni Jacobs. As you can see at the top there, all their brands, Agricol, our South African sunflower business, K2 and AgriSeeds are some of our African maize operations, Bakker is our Dutch seed business, Farmag is our agrochemicals business in Africa, May is our Turkish investment. And as you can see, it really is a global business that really focuses on emerging markets. In terms of their results for the year, they reported an increase of 2% in recurring headline earnings per share for the year to 181 million rand. We are satisfied with this performance from them. The business does have just over 1 billion rand of debt, but we have an eye on that, and it is well managed. And I think if we have to take the year in review for Zaad, this is probably the business in our portfolio that was most significantly hit with COVID. Especially in our Bakker operations in the Netherlands, where cross-border trade into North Africa and the Middle East was difficult, but we're confident that that business will restore to the previously profitable levels. We've received good performances from our investments in maize seeds in Turkey. That Eastern European market is a big growth sector for them. And also Farmag, our agrochemicals business, has made good inroads into the Western Cape market. In terms of agri conditions for Zaad, the summer rainfall up in the northern provinces were good, but our Agricol, our sunflower business, unfortunately there were lower hectares planted by farmers, so that obviously was a slightly negative effect on them, but that obviously meant that we had an uptick in maize plantings, which was also good for a different part of the business. We've communicated before the Lima grain transaction that we concluded. This is with our French multinational partner. That's a joint venture that focuses on GMO maize in South Africa, and we're very fortunate to have Lima Grain as a partner with us. The EAC's transaction will be concluded shortly. That is our East African hub we will be establishing soon, and there will be a nice distribution for Zaad seed varieties in those markets. In terms of our valuations, previously reported that we looked at earnings. The same principle applies, based on comparable EV/EBITDA multiples, obviously adjusted for company-specific factors. There was a split between the operations where we applied a slightly higher multiple to our seed business than our chemicals business. It gave us an average of about an 8.3 EV/EBITDA multiple on the Zaad group. And that EBITDA we normalized and adjusted downwards to exclude the accounting effects of hyperinflation that's currently being experienced in Zimbabwe. And in addition, the net debt was obviously deducted from the valuation. That brings us to our logistics business. Our CEO, Anton Potgieter, relatively new management team here. This business has really performed exceptionally well. If you look at our brands at the top, Tradecore is our back of port operator outside the Port Elizabeth Harbour. A big volume chain of manganese going through that port. Matola Cargo and GT, those are our businesses in Mozambique. And just to reiterate, we do operate in Mozambique, but it's from Beira and further south. So So TLG does not have any operations in Mozambique in the current conflict areas. FPT is the old fruit terminals, and Port Stevedoring is our ship-to-dock operator in all the ports where we operate. In terms of their results, I think an exceptional performance to report 12% earnings growth per share for the year. This business was affected by COVID, but only for a short period of time during March and April. And I think for this business to achieve this growth is exceptional. As you can see there, only has about 90 million rand of debt on the balance sheet, and this business is really positioned well. In terms of their performance for the year, the valuation has increased to about 1.3 billion. And as I mentioned, there were some COVID effects, but it was of a short-term nature, and we've seen a sharp V recovery in this business. It also has some exciting growth prospects in sub-Saharan Africa. So we really are very excited about this business. It generates solid cash flow and also paid a dividend to shareholders during their financial year. In terms of the valuation considerations for this business, similar to Zaad on an EV/EBITDA multiple, adjusted for specific company factors. And that market-related EBITDA is an EBITDA of about 4.4 for TLG, and the net debt and lease liabilities were deducted from the specific valuation. Then in terms of Capespan, our big farming and fruit distribution business also had a very, very good year. This business is run by Tony Fuchs. If I look at their results, they've had a complete turnaround from the prior year where they made a loss of 36 million rand, and this year a profit of 76 million rand. So we're very, very happy with this business. When you look at their balance sheet, also very, very low levels of debt, actually no long-term debt. That's just a working capital facility that fluctuates during the year. So really a big turnaround. And I think the turnaround, when you look at their year, it's got largely to do with the restructuring of the global marketing business, and now has a significantly lower cost base, improved performance from the farms. I think a lot of these farms had capex invested in them, and it took quite a while for them to get where they are now, but we're very satisfied where they are. And there's also been some solid contributions from the associates. That would be Yupa in India, Joyview Mao in Asia, and we also have an investment in Turkey. So yeah, I think also just congratulate Tony and his team with the restructuring that was done during the year. Also this business, good cash generation, as I mentioned, no long-term debt. Investments going into farms infrastructure to improve the farms continuously. And I must say, we're very satisfied with the performance. I think on the farming side, unfortunately in the Northern Cape, there was late rains, and this affected the business negatively. So, the results could have been even better if it wasn't for the unfortunate rain. And as a result of the good performance, Capespan also declared a dividend to shareholders. In terms of the valuation for Capespan, it's based on a Capespan Group NAV, obviously taking into account specific factors. We performed independent third-party evaluations on all the farms and all the infrastructure assets like the packhouses, and the associate investments were valued at appropriate PE multiples. And what we then did is we applied a market-related discount to the group NAV to get to our valuation. In terms of Kaap Agri, the agri retailer that's also listed on the JSE, run by Sean Welsh. This is their results for September last year, so it's probably old news, where they had growth of 4.6%. Subsequent to that, they have released a trading statement in January this year where they indicated their Q1 growth. And I just want to make the point that at September last year, the share price was 20.50 rand, and it's currently trading in the mid to high 30 levels. And this is obviously a reason also why the Kaap Agri investment in Zeder books has increased as a result of the higher listed price. Just in terms of that trading update, as you can see there, promising. And once again, I think the management here has been very, very proactive during the COVID period. And we really enjoy this investment. The valuation, as I mentioned, is based on the listed share price. And there's just an indication of how the share price have moved from September last year to end of February, which is Zeder's year end. Then in terms of AgriVision, this is our African farming and milling operation. Improved performances, but challenges still remain in this business. It's actually had a good year with very good wheat yields. The Makushi farming area, where we've always had a water problem, the dams are full and things are looking good. but I think it still remains a challenging investment for Zeder. The management team there is managing costs well, but Zambia in itself remains a difficult operating environment, and as also previously mentioned, the Zambian government default on their foreign debt, does raise a flag in terms of the Zambian risk. But in terms of Zeder, it is small in our lives. We do focus on it, but it's less than 2.5% of our sum of the parts. In terms of the valuation considerations, similar to Capespan and Agrivision Group NAV used and adjusted, we once again did independent third-party evaluations on all our farming and milling assets that we applied to the balance sheet. And then we similar to Capespan, applied a discount to the NAV, but in this case, we applied a significantly higher discount to take into account additional risk factors. In terms of prospects and strategy for Zeder, we're very fortunate where we are. Conditions are favorable in the Western Cape. We're going into a winter season, but the dams are relatively full. La Nina is still forecast for the year, which is an above normal rainfall. So our assets and investee companies are well positioned, to take benefit of these conditions. Obviously, COVID, there's some uncertainty, but as I mentioned, Zeder as a group is well positioned to support our investments. In terms of our strategy, you may have noted a caution release earlier today on Sense. As you all know, there has been a material change to the size and composition of Zeder as a result of the disposal of Pioneer Quantum as well as the special dividend. And that has meant that the board has re-looked at the strategy of Zeder. And as part of this process, the board has recently received various third-party approaches on some of our portfolio investments. These are currently being evaluated by the Zeder board, and a potential strategy shift to value unlock option. And I think I just want to make it clear that the strategy does not have a specific timeline, and we will be responsible and will execute this in an appropriate manner in order to maximize shareholder wealth. As a result of the approaches, we're in a deemed closed period for Zeder, and we will at this time not be pursuing any further share buybacks. But I think also important, our overall strategy remains, we need to create value for shareholders. That is my job, that's my responsibility, and as I mentioned before, we will do what is right for shareholders. In terms of communication, we will communicate to the market as and when there's progress on any of the value-enhancing processes. That, ladies and gentlemen, brings me to the end of my presentation. We will now go over to the Q&A session. If you will just bear with us for a few minutes that we can collate all the questions, and then we'll be back shortly to answer your questions. Thank you very much.
Okay, thank you, Johann. Good morning, ladies and gentlemen. We received a number of questions via email, and I want to implore you again, those of you that's got questions, please email them timeously to ensure that we can answer them. There's been a number of questions on share buybacks, but Johann, I think you've already mentioned that given the closed period, one is not entitled to do any share buybacks now. So I think that remains the answer for a number of questions, but we'll then address the rest of the questions. One of them is, if you don't do any share buybacks, why do you keep the cash at all?
I think the cash that we currently have on our balance sheet, the 870 Rand, that is prior to the special dividend. So that balance will decrease by 308 million Rand. And then that EA Seeds investment in Zeder, Zeder has made a commitment to support that investment, which will also lower that balance. So Zeder will sit with a significantly lower balance of cash on our balance sheet post those two events, but we'll still have efficient cash to be able to support our investee companies.
Thank you. Further question, SARS have made changes to tax relief received on the unbundling of investments. How do these changes impact on the economics of, for example, unbundling Kaap Agri? Has this change in tax been reflected in the sum of the parts valuation?
Thank you. I think the change in the tax law will have an impact, especially on something like unbundlings. In our sum of the parts and on our balance sheet, as a result of the change over to investment entity, we actually do not create a CGT liability or a CGT asset on any of our subsidiaries. So it's not reflected in our valuations.
Thank you, Johann. Another question is regarding AgriVision. Given the substantial investment in the past and the fact that it's been cut down in value, is this asset now held for resale? And then a question following that is, this asset has been disappointing and Zeder keeps holding same. Is there a plan to exit this asset?
Yeah, I think we have to be honest. It's been a very, very difficult investment for us. The valuation has decreased, but there are many factors for it. We do have two partners with us there. We're very close to them, Norfund and the IFC, and we are in continuous discussions with them as to what the appropriate strategy would be for AgriVision. But I think if we have to be honest, it has been a difficult investment, and yes, there has been shareholder value lost at AgriVision.
Thank you, Johann. The next question, to what extent was Capespan's good performance attributable to a weak rand and a strong harvest season last year compared to the restructuring that was mentioned in your presentation?
I think several factors I think the reason for the good performance was several factors. I don't think currency was a material factor at all. I think the better farming operations, especially in Namibia, our apple and pear and our citrus farms. But then once again, it could have been significantly better if our Northern Cape farms didn't have the late rains. But on the marketing side, the successful restructuring of that business led to significantly lower costs, which will be the case going forward as well. So the business is far better positioned now than what they were a year or two ago. And we think that these type of levels of profitability can be sustained.
Okay. I think you've answered on the capital gains tax scenario. Just give me 2 seconds to see if any further questions have come through. There's a question, I think it was mentioned in your presentation, Johann, but please can you indicate the dividends received from portfolio companies post year end? You mentioned April.
Yes, there's dividends from TLG and Capespan that were declared in their financial years. So those funds we'll receive in April. Capespan's dividend was a 50 million rand dividend to shareholders. TLG was a 36 million rand dividend to shareholders. And that will mean that Zeder will receive approximately 80 million rand of cash at the end of April. That's not currently reflected in our end of February sum of the parts valuations.
There's a question if the CGT impact following the Pioneer Cape span, I presume it means quantum disposal, has tax been paid already?
Yes. All obligations relating to those two disposals have already been settled and paid.
There's a question on the process with the approaches. I think given the cautionary status that Zeder is in at the moment, it's difficult to elaborate on that. But a number of these approaches were unsolicited, I believe.
That's correct.
Another question. Questions keep on coming up with regard to the buyback still. So from a JSE perspective, a company that issues a cautionary announcement and has not engaged in specific programs long before the time, etc., is prohibited from doing buybacks in a closed period. So therefore, it's not possible to do buybacks while you in a closed period, in other words, under cautionary. I hope that that answers it. Just give us another a minute or so just to see if other questions come through and if we've covered all the questions. Thank you for giving us a little bit of time just to check whether we've answered all the questions. Here's one or two. How many Zeder shares have been bought back? I think you've mentioned that, Johann. And following from that, at what price? How much the sum of the parts NAV has been enhanced by these buybacks?
Thank you. As I mentioned, we spent 426 million rand on share buybacks. We bought back 172 million shares. I guess in terms of the enhancement, if you use yesterday's closing share price and our average price that we bought at, the valuation or the enhancement will be about 60 million. But if you use our sum of the parts value as at end of February compared to the average price we bought it back, that enhancement will be closer to 310 million rand.
Thank you, Johann. I think there's, here's another question on, although this gentleman believes in the South African agri-market, he's concerned about Zeder's future, where it's going, and he's mentioning the loss-making Cape Span farms. I presume that was before the release of the results, which indicate they are profitable, Johann, if I'm correct. So he asked, is there any other plans that the company's management are embarking on going forward?
Yeah, no, thank you. I mean, I think as I mentioned, I think Cape Town is structurally a different business than what they were a year or two ago. And yes, I mean, I think, as I said, my role is to create value for shareholders. That would mean grow our existing underlying portfolio, increase dividends to shareholders, or potentially look at kind of a value unlock or realization of assets, when opportune. And I think if you look at the year in review, our assets have actually performed very, very well, with most of them reporting growth in recurring earnings. So we're very happy. And yeah, I think, we've got plans, and as I mentioned, there are certain approaches at Zeder, but unfortunately I can't elaborate on this at this time.
We have no further questions, but I think we give it another 30 seconds or a minute or so, and then Johann, I note no further questions here on the screen unless it hasn't come through yet. So we then close the questions.
Thank you very much, Johann. Ladies and gentlemen, thank you very much for joining me today. I appreciate your time, and hopefully you found the presentation and information useful. Thank you very much.